Daily News. On Monday, WTI crude surged 3% to $85 a barrel, its highest level in more than 2 weeks, after the 60-day negotiation period agreed between the US and Iran on June 17 expired. With both sides maintaining firm stances, markets are increasingly concerned that restrictions on the Strait of Hormuz could persist, keeping oil prices elevated and adding to inflationary pressures. Despite last week's CPI and PPI data easing expectations for a September Fed rate hike, US inflation has remained above the Fed's target for the past 5 years. Meanwhile, soaring US debt, increased issuance of long-term treasuries, and continued AI-related financing have added to upward pressure on long-term yields. The 30-year Treasury yield climbed to 5.31% on Monday, its highest level since 2007, and close to the 5.44% peak reached around the onset of the global financial crisis. Signs of tightening global liquidity are becoming increasingly evident. The US dollar fell for a third straight day, while rising bond market risks could eventually spill over into US equities, particularly technology stocks. Technically, while the S&P 500 pulled back slightly late last week, it continues to hold above key support at 7,700. A break below 7,700 could expose the index to further downside toward support below 7,600.